Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be talking about why Robinhood Gold was good at the very beginning, but after the month trial I am no longer going to be using it, and then kind of what my experience has been with it. So as far as why it is good, and I do think that all investors that are brand new to Robinhood Gold or Robinhood should use it, is to get your funds instantly available and to begin trading within the Robinhood app. So normally what happens is you're only allowed to trade if you deposit funds into Robinhood Gold higher than $1,000. Only $1,000 is enabled for instant use. So if you added $5,000 to your portfolio, you would only get allowed $1,000 to use. $10,000, still only $1,000 to use. Well, if you enable Robinhood Gold and say you set it for $2,000, $5,000, $12,000, whatever you set your margin account trading to be is how much your instant deposit ends up being. So initially I had instant deposits of $12,000, which allowed me to borrow $12,000 and then instant deposit $12,000, getting my account total to $24,000. And then I was able to continue doing that until where I was comfortable with having my account sitting at for now. So really early on, I was able to get my funds in very quickly without having to wait those 4 to 5 business days for my funds to become available. Once my funds were available, I took use of the early market hours and the after hours trading to start building my portfolio in prior to market hours and after hours, which is really nice because sometimes after hours a specific stock would actually end up dropping below where they were normally trading at during the day, or if they were in a downwards trend during the day, I was able to buy it towards the end of the day at a really good discount, and that worked well for a lot of my stocks. On one of the last stocks that I purchased, it actually took me into using some of the Robinhood Gold, and it actually ended up being one of my riskiest investments, which kind of drained my account here towards the end, and I ended up selling it off on Friday. That way I could fall back above or out of Robinhood Gold's trading margin, and I wanted to cancel my Robinhood Gold, and that's in an upcoming video I'm going to be making on how to cancel your Robinhood Gold portfolio and just the screens and what happens when you cancel it. But that's not going to be in this video. Right now we've talked about why I think it's really good and what's my experience been with it, and we're going to go into a breakdown of Robinhood Gold. In the previous video I had a breakdown of this, but this has been a little bit more detailed, and I took it has a better percentage wise of your total account balance. So my buying power, you're able to leverage and borrow 60% of what your funds are available in your account. So I have $50,000 in my account. I'm able to have additional buying power of $30,000 for a total of $80,000. Now, of course, you can go back and look at these other ones. So if you have $3,300, you can leverage $2,000, $13,000, you can leverage $8,000, $20,000, you can leverage $12,000, and $25,000, you can leverage $15,000. So of your total account balance, and you take your monthly charge and your yearly charge, I got the percent you would need to earn off your account total in order to pay back your initial buying power monthly and yearly charge. So you can see that for the first, second, and fourth tier, it really wasn't worth it. You'd have to initially make back 2.25% of your total account balance. But these other ones were actually pretty nice sweet spots of 1.88%, which is where I'm sitting at right now. With my $80,000, I would have to make a profit of 1.88%, which is not difficult in a year. Say the S&P 500 averages about 7%. I'm up 1.27% right now. This is actually it was up to 2.9 at one point before my account started bleeding out. But I'm sure throughout the end of the year, within a year, I'll definitely average around 10% or higher is what I'm aiming for. I'd like to beat the S&P 500. Otherwise, why not just invest in the S&P 500? So in my case, I think I can beat it, and plus with my dividend yields increasing, I'd like to pick and select my stocks. So going back to my example here, I would need to return a 1.88% profit, and I don't want to be selling my stocks in order to pay back this Robinhood Gold portfolio. So that means I want to have dividend payouts paying back this 1.88%. Now, of course, I'm going to be reinvesting all my dividend payouts back into my Robinhood portfolio. So 1.88%, or this $1,500, isn't going to be liquid cash that I'm just going to drain out of my account, sell off a stock and able to provide. I'm going to actually pay it out. You'd have to pay out directly from your account, your checking, your banking account. So I didn't want to end up doing that. And if we did the breakdown on this, say I did have $80,000 and I made 4% interest if dividend payout, so that would leave me with $3,200 of just dividend pay. This isn't including any of the gains that I made during the year on my investments. This is strictly dividend payout. Now, of course, I would have to pay out 15% of the tax, which is $480, leaving me with $2,720 in dividend payout. Now, this money would have already, total, it would have already been reinvested into my Robinhood account, and probably would have actually ended up making me more than the initial $3,200. But in this example, we're going to use $2,720 as our base for after taxes. Our net income after taxes would be, and then we have to subtract our Robinhood pay that we're taking out of our account, and then we actually end up with a net profit of $1,220 that we took off from our full dividend payout. And to me, that $1,220 of net income, that of course is already reinvested in our portfolio, this would actually just be our overall profit for the year of dividend payouts. It would have started at $3,200 minus the taxes, minus the Robinhood Gold portfolio. We would have been left with about $1,200 of overall profit for the year. We'd still have our money invested in Robinhood, but this would have been having to be taken out of our account. But instead, if I didn't want to do this, and instead just stay with my $50,000, and I make 4%, that's $2,000. That's minus by 15% is $300. I end up with $500 of extra net income that I don't have to pay back because I'm not paying out Robinhood for anything. I don't know if that's really a great example, but for me, I don't want to have $30,000 of extra buying power, invested in the stocks that I might need to sell off at a future. Once they have you with this account, once you're using their money, in order to drop below, no longer use Robinhood Gold, you either have to increase your account balance, your account prior to borrowing money, or you need to sell off on stocks. And I'm against selling off on stocks that I invest in unless they are high risky stocks that I added to my portfolio and they actually turned out terrible, but we're not going to get into that. But I believe in the end that I just want to go a year without Robinhood Gold, and I think initially it was nice to see and try it out for a month. It was nice just to have that in those early access, after hours access, and early access to your funds. But now that it's there, I don't see it as a very good investment. Maybe this lower tier where it's $10 a month for early and after hours trading, but even then I'm not really buying in and after a lot anymore. I may be adding 1 or 2 shares throughout the day where I have losses at, but my biggest loss right now in my portfolio is probably in the 2% range, what really isn't bad at all when I have other stocks that really off balance by 11, 5, 7, and 11%. It really off balance. It balances out my account overall. So in the next video or in one of these future videos, I have a few days left of Robinhood Gold, and I'm just going to continue to hold on to it for the next 10 days and just allow me to have early morning and after hours access. That way, if I do see that there's a dip towards the end of the trading day, I can buy in. I do have a little bit of cash on hand. That way I can buy into some stocks that have gone down a little bit in value that I want to build up my equity and average down on. Then I will do it at that time. But for right now, I'm going to go ahead and say that Robinhood Gold is not a great deal for me. So that is it for this video. Hope you liked it. Hopefully my math is correct on there. If you liked the video, hit the like button below, and please subscribe to my channel for future financial videos. If you have any questions or just want to say hello, please leave a comment and I will always reply back. Thanks for tuning in, and I will see you next time. Bye.